salesman is Silvanus, like they ask, where do I get that money? And these are the gentlemen and ma'am, daily answering the questions of how we can reach out to investors, what these investors and bankers look for in a startup. And we today, through these panel of experts, are trying to explore on the subject of what exactly VCs, bankers, and angels look for. Good afternoon, panelists. Thank you very much for being part of Connecting. First and foremost, I would like to ask all of our panelists to briefly introduce themselves. Also state your areas of work and how you are related with startups and entrepreneurs. Starting with Dipta.
Sure. Thank you very much for the kind introduction. So my name is Dipta Shah. I work for a small outfit here called High4i Ventures. My professional experience is split between management consulting and development finance almost evenly over the last 20 odd years. I've been back in Nepal now for 3 years, starting in 2018, and have been predominantly involved in helping grow the digital economy in Nepal across different contexts. So advisory for startups and founders, working with a lot of teams and, across this funding spectrum, and also looking for opportunities to put small deals together with young and emerging companies. Our model is not a fund model. We do deal by deal, and we syndicate the transactions. So I'm very much looking forward to the rest of this conversation. I'll hand over to Mr. Anirvan.
Hi, my name is Anirvan. I work for Standard Chartered Bank. I think in the context of today, since I represent the only international bank or financial institution in that sense in Nepal, everybody understands that we are a bank, so I'm not going to say that the area of work is banking. But as an international bank, I think we bring the network into Nepal and allow Nepali startups our network in the international world, bank, whether international world, whether it's FDIs and opening up the doors in terms of startups. And I was very interested to see the earlier conversation between India, Nepal, startups, leveraging of Indian startups and collaboration. I think we come in very well there because we have a very large presence in India and we are also present in Nepal.
Thanks for having you two be here today. It's lovely to be here, Ritu. So, good afternoon, everyone. I'm Ritu. I'm representing Business Oxygen. I don't know how many of you have heard about Business Oxygen. Business Oxygen was restarted in the year 2015, and it's one of Nepal's first international private equity fund, which is focused on providing risk capital for the SMEs. So, till date, we have made investment in 16 SMEs in Nepal, and we are working across 7 sectors. So basically, BU2 was started with a very much a catalytic effort that was made by IFC and is a part of IFC's Global SME Ventures program. So I'd be happy to share my experience about what we have been doing at BU2 during this panel discussion.
Thank you so much for inviting this platform to talk about entrepreneurship plus like how we invest in India, right? I am Pankaj. I am basically a co-founder of an entity called Yatra Angel Network, which is a fund based out of India. And simultaneously, we are also building a tech platform, which is dedicated to the venture capital investment in the way we are building like how we can disrupt venture capital investments in a sense, right? But I'll probably spend another 3 to 4 minutes to talk about how we have built this entity, right? So in 2017, we have started this. Before that, I've mostly worked with the banks. I've worked with the banks like ICICI, Kotak Mahindra, and Bank of America Merrill Lynch, mostly in corporate and wholesale banking. And in 2017, what happened, we have decided to left our job and started this, wherein we have started with the foundation of mapping the entire financial services ecosystem in India. And we had decided to take a road trip, right? Wherein initially we have thought about to take a road trip from India to London by road. And the idea was to travel to all of those countries to see like what's happening on the financial services innovation side. But that didn't happen in 2017, and we have decided to take a road trip in India itself. And in the last 4 years, we have mapped India 4 times, wherein every year we travel across India, go to 19 plus cities, stay on the ground for almost 90 odd days, meet with around 500 odd startups every year. To do that, we actually, go by car and stay in the cities like Delhi, Mumbai, Bangalore for almost 15 days, and rest of the cities for a week. And after having those conversations with the fintech startup, we also try to understand what's happening. But we don't also meet with the fintech startup, but we also meet with consumer, merchant, banks, NBFCs, and try to understand what are the still problem statements are there. And whatever we learn from the ecosystem, we try to give it back. After meeting with the fintech startup, once we select some of them, which we incubate and accelerate, and then we invest. So currently, Yarn is a fund, which is a 100 crore fund, wherein we invest anywhere between $100K US to $500K US into the fintech startups. So far in our portfolio, we have around 15 odd startups, which includes entities like M2P app, which will be unicorn this year. We will be having another entity like Pi Commerce, who is enabling National Payment Corporation of India. From a payment gateway point of view, we have entities like Discovery and multiple others. But foundationally, we don't call ourselves as a venture investor because we are a bunch of the people who came out from the banking and financial services side. So we help these startups in a different way. We more like operate in a venture operator role, wherein we became investor, we became their perpetual partners. And then whatever the help they need in terms of scaling up the idea from 0 to 1 and 1 to 10 or 10 to 100, we provide with them. Because foundationally, we believe the startup doesn't need just only the financial capital, but beyond financial capital, they also need some sort of mentorship support, some sort of the market connect enablement. So all of those pieces we provide to them. And we are based out of Mumbai right now, and that's all. Thank you so much.
Thank you. Hi, my name is Joseph Silvanus. I'm representing the Dolma group here. I'm an advisor with the Dolma Impact Fund, which is Nepal's first impact fund. Second fund is done. The first close of the second fund takes us to around $90 million. Hopefully in the next 2 months, we will announce yet another closure for, which takes us to 3 digits. Very interesting for this country. And right now we are extremely engaged with investing into new clients. I must confess, we are not a startup investor. Amun spoke about his journey. Maybe, people, we look at people and we'll talk about the things that we do. It's very interesting, but remember, a startup is just a name. So let's not go by typologies. It's you and your personal journey. I also run Dolma consultancy, and I run Dolma Himalayan Energy, which is a renewables developer in this part of the world. Today I want to not just talk about putting money on the table. I'd like to spend some time of telling you about other things, and people are talking about that. It's just not being an active financial investor. We're an impact investor. And I think some of the areas I want to touch for some of you who are going into that space will be very interesting. Thank you.
Thank you. Thank you, everyone. Hello. Okay. Hello. Thank you, everyone. You might have very well understood with the introduction of the panelists that we are going in for a very interesting ride, learning from your wisdom and your experience today. First up, I would like to start that question with the lady. DO2 started in 2015, as you said. It's been 7 years. I just wondered how the investing environment was like in 2015 and how has it changed in 2022? If you could compare the investment environment and entrepreneurial environment back then and today. Let's start with that one.
There has indeed been a lot of change, which I observe even when I meet like entrepreneurs. Because back in 2015, when we started with Business Oxygen, when we met entrepreneur, the market, we were all used to knowing about what debt and how to take loan from bank and how you can like get access to finance through banking by putting the collateral, and everyone is used to putting all those fingerprints and signing all those, putting all the personal assets to even take a little bit amount of money, right? So people were used to that, but selling your shares in order to increase your, in order to take a venture life cycle to the next stage, in order to get that access to capital was a new thing. And that was something that was very much new to the ecosystem. And when we used to meet like entrepreneurs, SMEs for the first time, we used to really spend almost like 2 hours in our initial meetings trying to discuss and trying to educate like how it really works. But that, I don't see that much requirement when I meet entrepreneurs in my meetings recently, because they are very much well versed with that. Another thing that I see change in is like, when a venture capitalist or when a PE invests in any venture, there is a huge amount of risk that they are taking. So that was something that was hard to digest initially for the entrepreneurs, because risk-reward concept was something very new. So like, why give that higher return when there used to be a lot of confusion, but nowadays I don't see that, because like we are much more educated about how a PE VC works, and it's not exactly like a Shark Tank, but I see the difference in the mindset, and that's taking place, and which is really good to see. Even on the ecosystem part, there's been a lot of change, because like when we started, this was, I think, the TFIs like IFC have made a very catalytic effort in setting up this risk capital market, like setting an alternative investment class in our market. So with that, when we were initially there, like there were not many players in the ecosystem, right? So already like when you see there are a lot of incubators, there are a lot of accelerators, so you see a lot of activities in the market, you see plenty of actors, there are also a lot of interest from the local side. So that's really interesting and encouraging to see at the same time, especially for the SME space. And also like, when we look, it's like, there are some unfortunate things that have also happened. Like for example, when the Industrial Enterprise Act got amended, I think that was done in haste, but the threshold limit has been increased to 50 million rupees. So because of that, the gap that's there for the SMEs who need an alternative source of money, like PE, VC fund, who don't have access to bank, I think they're still deprived from getting that growth money, and so the growth is still restricted. And so on that aspect, I see there's been a little bit of error from our side. Otherwise, even from the regulatory side, we see a lot of improvement. Like we hear about the startup policy being drafted, we hear about the government in process to give seed money for SMEs, which is really encouraging to see at the same time. So I see a lot of improvements, and I think even from the matter, like we've already had 5 exit in the period of like 6 years, I think that also shows. So the mindset is really changing.
Perfect. There has been a lot of positive changes, like you said. Dipta, you not only experience startup ecosystem and investment space in Nepal, but you've also had the experience of working in the other parts of the world. We hear stories that a lot of new startups in Nepal are getting back. They have been able to raise successfully a good amount of investments. Amunji just shared a similar story. Do you think this is a good time to be a startup in Nepal, or there are other areas where we should be cautious?
Okay, I think that's a really loaded question. So I could spend a whole hour talking about the pros and cons, but fundamentally, I think any time is a good time to start a business if you're just trying to solve a problem. Identify the problem you're trying to solve, go to market, right? When it comes to sort of timing the market and the issues, I think, look, you've got to take a sense of where in the market, where along the spectrum you're coming in, right? One of the things about our market, and Ritu mentioned this, I was having a conversation this morning with an accelerator operator who's also mentioned this. I've had many conversations in the last couple of months about this particular topic. One thing that I see happening in Nepal that's really good is a lot of mature startups are getting funded. That's awesome. The corollary of that experience, however, is that the risk capital and the impact capital is all the way across the spectrum where there's the least risk on a relative basis. So the challenge before us now, I think, is to figure out mechanisms to transplant some of that risk capital to earlier stages of the ecosystem so people can see the $50,000, the $100,000 checks more easily. Because if you don't prime the pump there, for other entities downstream, you're not going to have anything to invest in due course, right? So it's not really the quantum of funding that's available that's at issue, it's the allocation of that capital across the risk spectrum. And that's one thing that I think we need to look at very closely. The other aspect that's related to that is the threshold, right? So the $500,000-ish threshold. Look, I'm not a qualified legal counsel to opine on why that threshold was set up, but I have a very simple plea. Just make an exception for intermediaries that are domiciled in this country to not be subject to that threshold. I think that will enable local capital formation and distribution in segments of the tech-enabled ecosystem that are simply not available today. And it's a very simple tweak. Keep the regulation. For whatever reason you put up the $5,000 threshold for direct deals, keep it. But for entities that are domiciled here and have capacity to deploy earlier in the ecosystem, please let go of that regulation. But I think you'll see a whole sea change because there are numerous entities that don't make it out into these forums, right? But they're doing all the heavy lifting earlier in the ecosystem. Northamji also alluded to this a little bit, right? There's a segment of the ecosystem that will always be non-commercial. There will be a segment of the ecosystem that's always commercial, right? So we've got to make sure that there are enough capital and sources of capital with the right risk appetite, including government funding, including risk capital, including impact capital, and also make room for local capital formation to take the best bets in this ecosystem. Because from a sustainability perspective, if we perceive, or if there's a notion that the best deals on the table are gone, then you won't have that sort of local capital formation that's required to sustain the ecosystem out into the next 15 to 20 years.
Thank you. Definitely. Getting funded is difficult. Getting funded in the early stage is even more difficult. I think it is very crucial as well. That puts me to Pankaj. You run the Yatra Angel Network. Startups at the early stages, it's very hard to trust. Most investors say. As angels, they do just that. They trust, they invest. Why do they place their bets on, like startups in the early stage? What are angels' motives behind trusting and investing in these startups?
So, in my opinion, right, so whatever the bets we have taken in the past through Yatra Angel Network, right, most of the time when you meet with a startup, right, what do you see at the early stage? You mostly, hear the story from the founders, right? This is like what you do. We have invested into the startup at that stage wherein these people were working with the corporates and then they were still like thinking about it. We have invested at that stage only. The one thing is very, very common which we have seen at the early stage, like the founder, for us, like the guy who was talking about the story, right? The very, very similar thing on the passion, the determination and all of those things which we evaluate, right? In most of the cases, when you see the entire conversation, 60% of the time we see like whether the founder is someone who can actually convert it or not, right? Whether he has, the story in place, whether he's taking it ahead or not, right? And then the rest of the pieces will come in the picture. Let's say then we will talk about the problem statement, what he's solving for, how he's large, is the market, and how he will do it, right? So approach. All of those pieces will come at the later stage. But the most fundamental piece which we evaluate is the founder, right? Whether he will do it or not. In fact, in most of the conversation when we do during FinTech Yatra, which initiative we run, and during a year, whenever we travel across nation, we at least spend 12 hours a day in having the conversation, and we don't see a deck, right? We don't see like how the generally startup pitches to the VC or any private equity firms, right? So we don't go with the founders in that way. We generally sit with the founder, we try to understand, we go with the free flow conversation. And after having free flow conversation, we try to understand whether he can do it or not, right? So I think to answer to your question, the most important thing at the early stage, what any angel evaluates is the founder or the team, right? This is the most important factor.
Perfect. Thank you. While angels take the most risk, often said is banks do not take enough risk in terms of venture financing. Startups are risky indeed. It takes years for them to generate serious revenue and be profitable. For long, it is understood banks are not particularly interested in startups. Do you think this relationship is changing? If it is, how?
So I figured that we are definitely no angels, and that was made very clear. But I think Dipta, he summarized it very well, and probably I'll have to rephrase now because he gave away all the points which one wanted to cover. But I'll just summarize as follows. One is, banks will always find it difficult, and I'll tell you why a bit later. To answer your question, the relationship is evolving. I think banks have started becoming like startups. Whether it's the way we define our processes, the way we deliver to clients, banks have become like startups, and so there has been an evolution. And to your point, 2015, even in my career, what I've seen in the last 2-3 years, things have changed dramatically. I mean, a classic example from Nepal, which I think we should be proud of, is F1 Soft, right, in our industry. The other thing is, what is a given now is for banks globally, and this is not a standard chartered answer, this is a banking industry, that partnership and collaboration has to thrive. Banks can't do it on their own. So the fact, and we'll come into these examples later, that banks need to collaborate and partner with somebody and vice versa. The other thing which I want to point out is this whole notion of startups. It gets a bit blurred, right, this classification. There is non-startup and startup, and the problem with banks is we are highly regulated. It's not an excuse, and I admire what Pankaj was saying. I mean, we are swimming deep into regulations where you have to allocate risk to a capital and depositors' funds, the nimbleness and the flexibility, which anybody else, and like Dipta said, that combination of funding across impact funds, investors, whether angel, not so angel, etc. That combination is required because even though it's evolving, banks are highly regulated, and the only message we would give to startups is banks will still struggle over profitability and the business model. I mean, their sentiment, emotion cannot be converted into black and white, a document which is overseen by a regulator and a board. That doesn't work in reality, right? And which is why increasingly the business model, the profitability, etc. comes into play. But to answer your question, it is really important. Banks are taking bigger risks. And I think Nepal has one very good opportunity, is given that on the regulation side, the mandate to banks to, by force, to have a certain percentage of your balance sheet into MSMEs is a big thing, right? I haven't seen it in many markets, and which is why I think startups and SMEs in Nepal should use that option, where banks are actually committed to have a certain part of their balance sheet exposed to MSME. So it's already there in terms of regulation.
Thank you. Joseph, sir. You've had the experience of not working in Nepal, but also explored outside market. Just wanted to understand, what are the points in Nepalese entrepreneurs that you find unique, and what are the common traits that these entrepreneurs share with entrepreneurs from outside? As a venture capitalist, when you talk to an entrepreneur, what are the unique things that you've noticed from Nepalese startups?
Thank you. Before I go there, I just thought I'll pick on Dipta's early point about reallocation of risk capital. I'm making a few points, please note carefully. We all fall into this problem of using regulations as a crutch. For everything, there's a regulation. But believe you me, if you heard what Amun told you about passion, there are ways out of this. There's different types of capital. And all of us are just talking about capital, and we think that someone is entering the shareholder room and buying a part of their equity. It's not true. When you're in a startup mode and you're driving your own vehicle and that's the passion that you have, there's various forms of capital that you can use, fungible. Venture debt is now entering Nepal as one new asset class. Please remember, venture debt in Southeast Asia is the single largest asset class with a CAGR of over 55% year on year. What does venture debt do? I'll define it and Dipta, you can speak about it a little later. It is unsecured, high velocity, short-term debt. That's exactly what you need when you don't have a business model, but you need the cash to have a runway. Sebon has already introduced the SIF guidelines. There's 5 companies who are seeking approval right now. Some of them are going into the venture debt space. So this space is going to hot up well. So keep that in mind. I will come to the question that was initially posed to me about what do I see when I look at you here. I see extremely bright, talented, passionate people who feel somewhat disenchanted with the process. A lot of people come and give you stories. A lot of people come and tell you things to do. You have your own journey. I can tell you, in my 1 decade of working here, I have seen the most bright set of youngsters willing to make something out of themselves. In my years in the bank, and now with Anirvan's stint in Standard Chartered, we have taken a lot of Nepali talent into the group. What does that mean? That you can benchmark yourselves with the best. They are right now serving in our networks in various locations, Singapore, Malaysia, elsewhere, and they're actually raising your profile. So, again, going back to what Amun said, this is what we can create from Nepal. We are not in this country. We are beyond boundaries. And venture debt and venture capital is fungible beyond boundaries. So break those boundaries in your own mind. Don't be cloistered by existing regulations. They're all changing. Ritu just spoke about the changing mindset of the regulator also. So I think you're in a good space and you have to beat yourself only.
Thank you, sir. Like one of the most difficult things that startups seem to understand or misunderstand is their worth, valuation of their company.